Live materials exchange. We are just going to wait till the 12 o'clock Central hour to really kick this off, but we wanted to make sure everything was working correctly. Greg, you hear me good? And Matt,
Yep. Check, baby. Check, baby. One, two,
checking.
three.
Okay.
So, Matt,
Yes, sir.
how you doing this week, buddy?
I feel great. I just got done with my physical therapy. You know, they put me on the treadmill with the EKG machine, and they monitor my heart rate and all that stuff. And it's actually I feel really good. I actually in pretty good shape for
You got
the
the
first time in a while.
got the heart of a 25-year-old.
I do now. You know, they put those stents in there, and it kind of frees everything up, right? But
Cleans out the plumbing.
Mm-hmm. Yeah, for sure. But because of the pandemic and how the laws are and the mandates in Oregon specifically, if I lived in Idaho, it wouldn't be the same. But in Oregon, you can't really work out in gyms anymore without a mask on, and that's almost impossible. So I'm happy to be back in the gym, to tell you the truth, because I used to work out 3-4 days a week, my whole career, and it was a normal occurrence. I had a gym membership for my whole adult life, and I missed it. So unfortunately, I had to have a heart attack for that to happen. But I'm back in the gym, baby.
That's great, man.
I saw a guy outside running yesterday wearing the mask, and I said, "Wow, that's yeah. I don't understand. Do you like wearing a mask running outside?" Because
I always laugh at the people that are driving in their car by themselves with a mask on.
Was he running Was he running backwards?
He was not running backwards, but I mean, he might as well have been.
Maybe he'll get it from the birds.
Well, you're up in the North Shore when you see people running with one on and have one on their dog. Well, look, it's noon, so let's launch this thing. So, welcome to Materials Exchange Network. This is our 20-somethings edition of This Week in Lumber with Greg Riley and Matt Beamer, and we have a great guest that we'll bring in a little bit, Brian Wesbury. And you should stick around because he's an economist that knows a lot about housing, and this is a very important subject for all of us. But let's real quick talk for about 5 minutes about what happened in the market. Greg, all of a sudden, I saw people changing prices, lowering prices. I mean, what we have is kind of a what I'm seeing in our little world that we live in right now is anxiety.
That's because of COVID?
Lumber trying to deal with volatility. I think Matt Beamer and you both said something about just fatigue, right? And then we dealt with a real wide basis that is now, as Greg, you always have that comment, basis always works. So let's just talk a little bit about what we saw this week on the lumber side so far relative to last week.
Go ahead, Matt.
Well, I'm actually pretty busy, Ashley, and so my truck business, my distribution business is I wouldn't say it's the best it's ever been, but it's a solid 8, on a scale of 1 to 10. I'm getting a lot of orders. I am letting people counter me a little bit, but my prices are fairly high. It's not like I'm, trying to get rid of my inventory. It's hard to get the inventory there in the first place because of all the delays that we're having with rail and embargoes and trucking. And so my attitude as a distributor is, hey, I want to get paid for this. I have real wood that's on the ground, ready to go. I had to go take a risk and, 2 months ago and buy this stuff. And I want to get rewarded for it. I'm not willing to just sell all my inventory at, 70 cents on the dollar. And I don't have to. Business has actually been pretty good. For me on the truck side. On the rail car side, my rail car inquiries have gone down in general, and they're a lot more specified. So now we're at the point in the market, I guess what I call the cycle point, where people are just looking to cap off their most recent purchases and try to fix some of the tally holes that they have in their inventory. And they're willing to pay a high price to get that one item that they're short on, but they're not going to buy 5 cars, a good old random at some new high price. It's just, they're not interested in that. They've already done that. So, those are my opinions on how things are right now. I think the mills have a fairly good order file, and I think we're in a transitional phase here where we're kind of running out of momentum in futures. And eventually we'll run out of momentum in cash because it always happens that way. you've got Thanksgiving and Christmas in front of us. So, you know, that time of year also. So there you go.
Yeah,
Lots of moving parts.
so. I mean, Greg, you and I talked at breakfast last week too. We kind of came to the conclusion. Look at lots of stuff going on right now. Logistics, we can beat up that one, but we noticed that people are opening more reloads because they need to service areas closer because you can't move the shipments as far as you used to, right? Uh, Consolidation has caused a big change in the supply chain because honestly, you and I all know some of these big buyers that used to buy all the time, and now they've been consolidating to other groups that things have changed a little bit, right? So they're not doing the same exact thing. And then you've got the overall market, speculative and volatile market and futures, which Greg, kick it back to you. What's your thought on all that?
Well, I mean, what's dominated the market relative to futures for the last really month and a half has been the big premium, and we talked 2 months ago that it was once in a lifetime opportunity for basis traders to lock in relatively risk free trades. Only to see those numbers blow up by a factor of 1.5 to 2x a few weeks ago. We're starting to see that come into line. But I mean, still, if I think historically, today's basis is probably double what we would have thought historically would have been a good basis. And that's on the contract product. When you look at some of the other items that are undervalued to that, the basis is even better. So it's the market that continues to be supportive to the market. The question is going to be, I think you said, hey, you've seen some people lowering prices. There's been a lot of basis wood in the marketplace over the last 6 weeks. So we'll see as the basis comes in how that flows through.
That's a great point, Greg. One of the interesting things a few days ago, housing starts came out and permits, and that's, like you always say, that's the history, right? But nonetheless, we're creatures of habit, and sometimes that's a little tear in the force when people see a little. I don't want to say negative number, but less than expected. Let's put it that way. So. With that in mind, I'd like to. I'll introduce our guest, and then we'll bring him in. Does that make sense?
Well, yeah. You don't want to bring him in so you can introduce him?
No, I'll introduce him first, and then Nick will bring him into the room. But I got to tell you, I'm excited to have our guest on. Brian Wesbury for a lot of reasons. One, because he's busy and he took his time as a leading economist to come on our show. With all the schedule conflicts and everything that he has, just in a high profile job like that. So the topic of economics in general should be important to everybody here because it's our life in this business, right? Supply and demand. I know I really like the supply side, right? But a lot of people look at the other one. So I think that's deeply interesting to all of us. So Brian Wesbury, he's had an amazing career as an economist. Not only an economist, but an award-winning economist. USA Today and Wall Street Journal have given him awards, plus many other awards. Served as the chief economist of the Joint Economic Committee. And so I really think that's important because actually reading one of his books, The New Era of Wealth, last night, I think he made the point in that is, if you're a good person working in the private sector, you generally go over to the government and you're a good person. And one thing about Brian is I think he's a really good person, and he basically serves the private sector and the public sector. He served also. He served as the chief economist of the Joint Economic Committee in government, has had many high-profile jobs, and he's currently the chief economist for First Trust. As I said, he's also an author of 2 books, The New Era of Wealth, and It's Not as Bad as You Think. Both of them are in my rotation. As you can see, I found them last night and threw them up here. So I want to bring Brian in, and let's start talking to him a little bit about what we have going in the lumber side.
Hey, Brian.
Ashley.
Yes.
Hey, Ashley. Hey, Greg. How are you?
We're doing well, thank you.
Doing great. Did you hear the intro, Brian?
I did. You know what? I'm I hope we don't break up here because it was breaking up a little bit. Thank you, Ashley. Thank you for that very much. And you know what? I've known Greg for 40 years, so it's a pleasure being on with you guys.
So, Brian, housing starts for September came out yesterday. Could you give us a kind of the highlight, what your insights were into that?
Sure. Ashley brought up an interesting point. People pay attention to these monthly numbers, and starts and permits were down in September. We just reminded everybody, hey, Ida smashed Louisiana and went all the way up and flooded New Jersey. You can clearly see it in the numbers. The Northeast and the South were both down in starts and permits. But if you dig beneath those numbers, we're at the highest level of starts we've seen since 2007. So a little monthly blip in the number doesn't change that. The housing pipeline and this construction pipeline is really strong.
Yeah, you highlighted something I saw in your work about the backlog of authorized but not started.
Yep. Yeah, it's the highest ever in the history of the housing start data, going all the way back to 1999. And we all know the issues with this. We have supply chain problems. We have really low interest rates, really high demand. We have fluctuating construction cost, and so builders are kind of waiting to put that house on the market. They're not going to price it early. They're going to wait until the very end when they know the cost to build it. And so what's happening is you see both ends of the pipeline. It's like a barbell. Lots of houses being finished, but lots of houses not being started yet because builders are wary of, as what Ash said, the volatility in between.
Yeah, looks like we lost Greg.
No, that's great.
I'm back. I'm back. Yeah. All of a sudden, everything just went dark. I hope I didn't miss the best part. I hope I didn't miss the best part of the show.
But we're gone for 10 minutes, Greg. What are you talking about?
It didn't seem like it was that long. Hey, Brian. One of the things that's been a big issue to the industry, our industry right now, is supply chain. And I know that you're going to follow up this call with a segment on Fox Business talking a little bit about that. I can't help but think that there's probably 6 to 8 regulatory changes that the government could make, which would really make an impact on supply chain. Why is it, do you think, that they're not doing that?
Yeah, I mean, Greg, this is a good question. I hope I'm coming through clearly here.
You are.
I'm going to back up just a second. Retail sales are right today 19.7% above where they were in February of 2020. So think about that number. Well, if you went from February 2020 to today, and we never had the pandemic, we never had the shutdowns, none of the Fed money printing or borrowing from the future, retail sales would be up about 7%. And so what we're trying to do is get the rat through the snake, if you will. That we have 13% more spending than we would normally. How does the system handle that? It's impossible. And so part of this supply chain stuff, I'm going to agree with you that there's regulatory issues. There always has been. But part of it is we borrowed so much money from the future and spent it today that we overwhelmed the supply chain. You can't do that. It's like everybody took their credit card out, except we took our grandkids' credit card out and we spent it. And guess what? Grocery stores, Walgreens, Dick's, all of them run out of stuff. And so and then you have to fill it up. So you need more ships and all of that. So anyway, having said that, yes, I wish we would take this opportunity to fix some of these these regulatory issues, Greg. I mean, with trucking, the hours of driving, the age with which you can get a license, there are all kinds of different regulatory things that keep us from operating purely efficiently. But I would argue the biggest problem with supply chains It's just all the stupid decisions government has made over this past 18, 19 months.
And Brian, I was looking at one of your Twitter comments yesterday. It's like, why do we want to borrow 4.5 trillion again?
Yeah, exactly. Yeah, I mean, it's funny. They're trying to argue that inflation and supply chain problems are because wages are up and everybody's spending and everything's good, and yet at the same time they're arguing for more spending. It makes no sense to me. Joe Manchin wrote an article in the Wall Street Journal. He said we need to pause. I mean, I can think of about 20 things we need to pause on right now because everything's coming so fast and we haven't even absorbed the stuff we've already done. So anyway, but yeah, if I would love, Greg, to go use this opportunity to make some regulatory changes, and it will help, but it won't solve the entire problem.
So like interest.
Uh-oh.
I think we lost Greg again.
Greg, you were going to say something about interest rates moving, I think, a little bit.
Oopsies.
Yeah, well,
yeah.
I'm going to answer.
So let's talk about interest rates, Brian.
Mm-hmm. All right, Matt.
I'll fill in for Greg for a second.
Got me? Am I back? Hey,
back.
I'm back. I don't know what's happening every time. No, what I was going to say, interest rates are an important driver in the housing market. And
right.
I was listening to John Paul Tudor Jones this morning, basically saying that the Federal Reserve is the most irresponsible and their current policy is the most inappropriate policy in his lifetime. He's a pretty smart guy, I think.
Yep. I'm going to agree with him, Greg. Here's the way we all grew up. Everybody on this video, probably everybody listening, is that we watched the Fed come in 2008. We watched the Fed do its thing in 87, during different crises during our careers. And supposedly what the Fed is doing is filling the money with the system with money, providing liquidity to financial institutions so that we don't have a problem that spreads. Well, right now, banks are flush with cash. The system, we have more M2 than we've ever had. We have more bank capital than we've ever had. There is no reason for the Fed to be, buying $120 billion of bonds every month and holding interest rates at zero. The core reason for the Fed doing this, which, by the way, I could argue against too. The Fed shouldn't come in and save us, but nonetheless, if that's what they're really trying to do, there's no reason for them to do it. And so I totally agree with Paul Tudor Jones that this is irresponsible. By the way, he's not the only one that said it. Larry Summers has said that too. And yet the Fed is going, I think they're going to replace Jerome Powell with somebody who won't taper and who won't raise rates as soon. They're going to keep the pedal to the metal and try to keep this economy red hot and, into the elections.
So, I mean, we're what you're saying, we're basically building in the next crisis with the current policies. So we just ride the wave and hope that we get off at the right time. Is that the strategy?
Yeah, I think that's their strategy.
Keep paying people not to work. I mean, if we're going to keep paying people not to work, then we're going to have even bigger problems, right? Isn't that another big problem?
Yep, exactly. There's a coral reef right ahead too, and we're losing control of our surfboard. Here's the issue with this is that this time. So a lot of people think the Fed can get away with it this time because they did QE 1, 2, and 3 after the 2008 financial crisis, and we didn't have inflation. But there's a big difference between then and today. Back then, we put all that monetary base in the system, and then we hammered banks with new regulations. So they didn't really lend it out. That's when we ended up with all these new financial standards and regulations, and it's impossible to get a mortgage, or not impossible, but it's hard as heck and all of that stuff. But this time, when they put the money in, they actually paid it directly to companies, gave it to people, and the M2 measure of money has exploded. It didn't back in 09, 10, 11, 12. And this time it's grown 30%. And Greg, that means inflation is coming. We already see it, but it's not going away. And I'll just come back to lumber. I heard somebody describe it. You probably describe it this way, Greg. It was an Eiffel Tower, chart, right? And the price of lumber went way up, and then when lumber came down, everybody goes, "See, it's all transitory." However, what they don't say is that it came down significantly, but lumber prices are still 40-50% above where they were 2 years ago. That's permanent. I mean, I'm not saying you don't have traders, and technicals take lumber in and out, but we are at a new level for the price of lumber, and it's going to be significantly higher than it was 2-3 years ago.
Right. Honestly, Brian, I mean, my attitude towards that is lumber's been the same price for most of our careers. Greg's been doing this for 30 some years. I've been doing it for 20 some years. Same with Ashley. And we've been trading lumber from $300 a thousand to $500 a thousand for 98% of that time.
Yeah.
And so, it's okay. It's okay that lumber prices could reset a little bit. An iPhone doesn't cost $100 anymore. It costs $500 to $1,000. It just, the cost of goods is going to go up over time, but lumber prices never really changed until the last 2 years. Having said that, do I think we should be trading lumber at $1,000 a thousand up to $2,000 a thousand? Nah, not really.
Nope. Yep. I'm going to totally agree with you with that, and I will just put a little bit of macro economic context around it, and you can buy it or you can not, But from when Paul Volcker took over the Fed in the late, he actually did it in the late 70s, but really jammed his foot on the brake and stopped inflation. Since then, we've had really calm, quiescent inflation numbers. 1, 2, every once in a while, 3, 4, you get a hurricane, it goes up, something like that. But 1 or 2% for 30 years. Well, it's all over now. Because M2 is up 34% from where it was in February of 2020. The Fed has not pushed this kind of money into the system ever, really. But if you look at it over time, since the 1970s. And that's why a lot of people think this is transitory and prices will go up because of supply chain issues. But I don't think they're permanently at 1,000, 2,000. I don't think that. But we're going to be up from where we were, and it's going to be 30-40% higher than we were used to before.
So it sounds like they're doing it on purpose. So the next question is why? What is the reason? Is it to get more tax revenue? I mean, is it to devalue your retirement savings? I mean, there's got to be an end run here as to what would the reason be to just pour gas on the fire of our economy?
Yeah, I mean, Matt, that's a great question, and here's, I guess this is my best answer, and that is the Fed has monetized government spending. We have this new, it's not new, by the way, but it's new sounding, modern monetary theory out there, and I have studied it a lot, and basically it's an anti-capitalist group of people who will argue all day long that the government can spend as much as it wants because we have the printing press that can fund it. And in the end, we can just raise taxes and stop inflation whenever we want. This is Marxism. It's anti-capitalism. It's Keynesianism on steroids. And so really why the Fed's doing this is to fund all this government spending. Ash asked the question about another $4.5 trillion. If we get that, they're just going to do it again. And that's why they won't stop buying $120 billion a month. I think when Jerome Powell said they would start tapering in November, I think he sealed his fate. I think he will be replaced as Federal Reserve Chairman.
Brian, I'm going to change gears a little bit. We got a big game this weekend. The Wildcats are headed to the Big House. I want to know. I want to know. What do you think? Can we pull out a W in the Big House?
I am gonna take this seriously, Greg, and act like our friend Ted Albrecht here for just a second. Who announces all the games. But I'm gonna do it my way. and that is that the cat. Two things about the cats. One, it's a rebuilding year for Northwestern. It's ugly. All right, we're not Alabama.
I thought they were all rebuilding years.
Hey, easy.
Yes, exactly. Yeah, so I'm not sure. Although it seems like every year Pat Fitzgerald and we always upset somebody. So maybe we'll pull it off.
Well, just one last thing, Brian. So everybody watching this, home builders, distributors, wholesalers, everybody in the supply chain, what can you leave them with and what to expect in the next 3 months, 6 months, 12 months? Because everybody in this industry has fatigue from the last 12 months. They're worn out and don't know what to do. And you see these big spreads in futures versus cash because of it. What should they expect in home building, remodeling, et cetera, going forward?
Yeah, here's what Ash. You know what? I almost hate this question in one way, and that is I don't know if people will understand when I say this, but I'm not a Keynesian, and I hate being a Keynesian. Okay. And Keynesians, all they do is they say, well, the government's going to spend 500 billion more this year, so that's 500 billion added to the economy, which increases growth by 1.2%. And it's like this really stupid, simple model, but in the end, it always blows up because government spending can't create wealth. Well, here's my whole point, and that is most of the government spending is done now. There's still, money, hundreds of billions out there, but it's not like it was over the last 12 months. So when I kind of think about the growth rate of the economy, it will be slowing as that dissipates. All right, that's number one. Number two, the Fed is super easy. They're not going to raise rates. So that's going to keep the value of homes up. But I don't expect the same volatility in prices that we've seen. 40% increase in price in Naples, Florida over the past year for a home. It's not going to happen again in the next 12 months. I don't think lumber is going to be as volatile. I think things will settle down. But then to go back and Greg, you pointed it out. What we calculated is first of all, we need 1.5 million new housing starts a year to keep up with demographics, fires, tear downs, all that stuff. And we have not done that since 2006. And you can tell that because the number of authorized but unstarted new homes is at a record high that we've never seen. Not since 1999 we started keeping the data. So I would argue the housing market will stay strong, but the volatility from all of this government spending is going to begin to dissipate. We're not going to have any recession in the next 12, 14 months, but I expect volatility to come down. So I'm not sure how that plays out in futures and cash. You're the guys for all that stuff, but just in general, we're going to have inflation, but it's going to calm down from what we're used to because supply chains will slowly but surely fix themselves.
Yeah, I'm curious, Brian. One last question, if you don't mind, on the supply chain issue. We read reports about 88,000 containers sitting on the docks in Savannah, 74 vessels sitting outside of Los Angeles harbor, things like that.
Yep.
I'm in the middle of dealing with logistical problems in the port of Houston right now, and they're actually doing better than most ports, right, in terms of service.
Right.
But still, it's not easy. It's not like it was a year ago or 2 years ago.
Right.
How do you feel our monetary policy of the government's right now is it going to help that situation? Are we actually taking this serious? Because I see that being a bigger problem to the rest of America, not just the lumber people, right? I mean, to people that just want to go out and buy little Susie a toy or go buy some goods, like for a house. If you need to buy a washer and dryer or just go buy something for Christmas that's imported, a lot of our stuff in American stores comes from overseas. It could come from South America or Europe or Asia, but if they can't get it through the system, what are your thoughts on that?
Yeah, I mean, I'm going to try to answer this using. I hope this comes across understandably, I guess is the way. So let's just say, and I'm making up numbers completely, that every day in the Port of Houston, 42 ships come in on average. And the Port of Houston can handle 42 ships, 42 ships, 42 ships. And then all of a sudden the government borrows 5 trillion bucks from our kids and grandkids, gives it to people, and now they buy so much stuff that it's equal to 65 ships a day. And the port can only handle 42. And so those extra 23 ships every day, they maybe they increase their throughput to 52 ships. But now every day they're adding 13 ships to the pipeline, and it's the rat in the snake. And I think that's what we're living through right now. This isn't a permanent problem. However, it's going to drag on because you got all these ships sitting around. A container, it costs 20,000 bucks for a container. It used to cost 400. There are, I mean, don't get me wrong, there are real issues out there, but a lot of this is because we're trying to push more stuff through the system than the system was built to handle. What I don't want to see is massive new investment in ports and ships and all of that, and then we go back to normal, and now prices crash, and we end up with a problem there. And so I would leave you with this, and that is, the more the government tries to manage a problem, the more it messes it up every single time.
So, this is a good opportunity. It's like we need to change the whole discussion. Is what can we get? We should be looking to get government out of things, not looking for opportunities to expand government. Hey, Brian, listen, we really, really appreciate you taking the time today to be with us. This is awesome.
This is great.
Everybody, you can find Brian on Twitter. He's always looking for new followers. The mob follows him around a little bit. And so, having some friends come on behind would be welcome.
Yes, exactly.
Thank you very much, Brian.
Yeah,
thank you, Matt, Ashley, Greg. It's great to be with you. Thank you very much.
Yeah,
All right,
thanks,
have
Brian.
a great
Take
day.
care. See ya.
All right, everybody. That was great. Any feedback, Greg and Matt?
That guy's pretty smart, and it's interesting to hear a guy point blank come out and just, we tap dance around this all the time because we don't want to be too political, but the guy just flat out comes out and says, hey, the government's screwing things up. It's refreshing, kind of some open honesty that we're, I try not to tick off too many people because it's in my nature. I'm trying to, sell lumber and all that stuff.
LinkedIn just emailed me. Our credentials have all been pulled.
Right. No, I'm joking. I was joking about the Twitter thing because he gets attacked routinely by the mob. I mean, he's borderline. That I don't even know how they let me stay on because the mob goes after him.
Well, he's obviously he's a smart guy. He knows what he's talking about, and he can back it up with facts and figures. And those are people like that. They don't just fall off the trolley car everywhere you go. He's put a lot of time and effort into developing that kind of knowledge. And the guy writes books. I mean, he's on different media things. Yeah, he's the real deal.
Brian gives about 200 or 200 or more speeches a year to financial advisors all around the country, and he's very highly sought after as a speaker. We were really blessed to have him on here today, and it was really fun.
I think the least we can do is send him a mug.
Yeah, exactly. Sure. Send him a mug.
He's on Fox Business after this.
He'll be on Fox Business at 1:15 today. So yeah.
So cool. Are you going to go to the big house and watch Northwestern, Greg?
I'm not. I got actually my buddy Dwayne said we could come up, but I got a deal on Friday night, and it's kind of hard to make it up there for an 11 o'clock kick Saturday morning. But
I went there, I don't know, 5 years ago to watch Oregon State. That was when Harbaugh was brand new. I think it was like his first game or second game as coach, and we weren't we weren't going to win. I knew we weren't going to win, but it was quite impressive to see 110,000 people in a stadium. You know, we don't have anything like that in Oregon at all. Even the University of Oregon Stadium, which is relatively modern, I think it only holds about 60,000 people. So, you know, a West Coast guy, that was a kind of an eye-opening experience to see how seriously the Midwest takes football, right?
How did you enjoy the cowbell? Did you enjoy the cowbell?
I did. I enjoyed the whole experience. I mean, and I must say that the tailgate, the pre-function, all that stuff, just walking around campus, just seeing the University of Michigan itself, and talking to the Michiganders and all the fans there. They were really gracious, really nice to the out of towners that made the effort to fly into Detroit and rent a car and get a hotel and go to the game. And it was classy. It was cool. I really enjoyed it.
All right, guys. All right, I got a
good
hot.
show, guys. I
Thanks.
appreciate it.
See you. Bye.
Thanks. Bye.